Welcome to our first episode here of Pioneering Profits. Today we will talk about the market reactions to big events like the one happened today when the Fed decided to cut their interest rates by 25 basis points, dropping them at 4.5%. But the most important part out of this was the market, actually the price didn't follow through, and we saw a huge, enormous strength in the US dollar, which led us to the next question. So why that happened? I know many traders out there and investors, they were betting on US dollar's weakness this week. It was normal, actually. We were expecting the US dollar to plumb and to show some weakness across the currency board. But at the end, we have to trade and we have to invest based on what we see that is happening and not based on what we think or what we want to believe. At the end of the day, we are speculating on the price move, or we are holding some positions for the long run. And actually today I just finished a webinar that I was doing for a prop firm, and the subject was the crypto trends for 2025. And one of the subject was the correlation, the assets correlation, the cryptocurrencies correlation. And I was explaining to the audience that if you don't understand the correlation between asset classes and in what sort of time horizon you have to look at these correlations, even if you understand to compare them, you won't be able to get benefits in the long run. So the same with the way we perceive and act on the news events. It is normal to take positions, either as traders or invest based on the forecast of one event happening over the other. But you have to be aware that if the market won't follow through that event, what you going to do? Are you going to stay in that trade? Especially if you are holding trades with leverage, if you're trading prop firms or with a traditional broker. Let's say today the euro US dollar was moving sideways, let's say on the intraday charts. But if you didn't make the effort or you lack understanding of which time frame will be relevant to watch to understand the overall market sentiment, and you were trying to take some positions actually betting on the US dollar strength, that will have led you to a trading disaster, especially if you didn't use a stop loss. But if you had the knowledge to understand that the market was in a downtrend, you will have been looking to wait for the outcome. Why is that? Because a downtrend on the euro US dollar means euro's weakness and US dollar strength. If based on the expectations the US dollar was about to become a strong currency across the board, what will happen then? We will have seen the euro creating an upside breakout, right? But the market didn't follow through, meaning that the euro kept being a weak currency. So understanding how to combine both the fundamentals and the technicals will give you a top-notch edge in the markets. And some people, they may ask now, okay, Theo, that's good what you said, that's well said, but what about if the fundamentals and the technicals, they are not in a line? Then you'll better look for something else to trade, or better look for a different investment. High probability trading and investing requires skills. And like in any other field, in sports, in business, same in trading and investing, skills comes only from doing something. You cannot just gain academic knowledge and expect that you're going to become a skillful, or that you automatically are a skillful person. I'm sure you are smart, I'm sure you are capable, but you have to go through the process of gaining enough exposure in the markets, which leads to the experience as well. And with this, you're gonna gain the market understanding, sometimes the market feeling, the market pulse. Let's face it, there are brilliant traders out there. They have the pulse, they have that feeling of the market, but again, at least those I know, they are waiting for confirmation before they commit their money into any trading or investing setup. The bottom line, you always need to wait for the outcome in order to see how the market react. And afterwards, you create your trading plan based on what's going on in the market right now. What if you missed some opportunities? That's another story. It's normal and it's nothing to worry about that or to blame yourself about that. Markets, they are in a constant move 24/5 or 24/7, and you just need to have a plan, be patient, and everything will follow and will come apart. In the meantime, please make sure to visit our website at marketmindsmastery.com. If you need to get some private coaching for some sessions in order to fix some of your trading errors or investing errors, please feel free to contact me. Or if you're ready to sign up for our membership like other people and gain access to daily signals, gain access to webinars, gain access to top-notch education, trading and investing education, please make sure that you get that membership. Thank you so much for listening, and I will definitely see you in the next episode.